Personal income tax is a type of tax that people pay to the government. This tax is taken from the money you earn in a year. This money is called your income. The government uses this tax money for many important things. For example, to build roads, schools, and hospitals. It's also used for public services that every citizen uses. You can think of this as your contribution to the country where you work and live. By paying taxes, you help improve the community and its services. These services help everyone, including other workers from Myanmar. This is a legal responsibility for anyone who earns money in Thailand. There are two main groups of people who must pay income tax in Thailand. The first group is called tax residents. If you live in Thailand for 180 days or more in a calendar year, you are a tax resident. A calendar year is from January 1st to December 31st. If you are a tax resident, you must pay tax on the money you earn in Thailand. You also have to pay tax on money earned from other countries if you bring it into Thailand in the same year. This rule is important for many Myanmar workers who live in Thailand for most of the year. The second group is called non-residents. If you live in Thailand for less than 180 days in a calendar year, you are a non-resident. Even if you are a non-resident, you still have to pay taxes. However, you only need to pay tax on income earned in Thailand. For example, if you only worked in Thailand for 5 months, you are a non-resident. You will have to pay tax on the salary you earned during those 5 months. You don't need to pay Thai tax on money you earned in Myanmar during that year. So why is it important for Myanmar citizens to understand this? Many Myanmar people come to Thailand to work for several months or even years. If you work and earn a salary in Thailand, you are responsible for paying taxes. This is the law of the country. Your employer might help you by deducting tax from your salary each month. This is very common. But it's your responsibility to make sure the correct amount of tax is paid. Understanding whether you are a resident or non-resident helps you know exactly what your responsibilities are. Following the law keeps you safe and helps you avoid problems with the authorities. The amount of tax you pay in Thailand depends on how much money you earn. Thailand uses what's called a progressive tax system. This means that people who earn more money pay a higher percentage of their income in taxes. For example, the first 150,000 baht you earn in a year is tax-free. This is called a tax exemption. If you earn between 150,000 and 300,000 baht, you'll pay 5% tax on the amount over 150,000 baht. As your income goes up, the rates go up too. This system is designed to be fair, so people who earn less don't have to pay as much as those who earn a lot. To figure out and file your taxes, you'll need several important documents. The most important is your tax ID number, which is a 13-digit number you get when you start working legally. You'll also need a paper from your employer called a 50 Tawi, or Withholding tax certificate. This paper shows how much money you earned throughout the year, and how much tax your employer already took out of your pay. It's very important to get this paper from your company. You should also keep your passport, work permit, and any pay slips or receipts related to your job. Keeping all your documents organized will make it much easier to file your taxes. When you file your tax, you'll need to use a special form. For most people who get a salary from their job, the form is called PND 91. This form is for people who earn income from employment. If you have other types of income, like from a small business or renting out a house, you might need to use a different form called PND 90. For most Myanmar workers who only have one job, the PND 91 form is the correct one to use. You can get these forms from a revenue department office or download them from their official website. Your employer often helps with the tax process. Many companies have a system called withholding tax. This means they take out a little bit of tax from your salary each month and pay it to the government for you. This makes it easier because you don't have to pay a large amount of money all at once at the end of the year. The 50 Tawi certificate will show the total amount they've already paid for you. When you file your PND 91, you'll calculate your total tax for the year. If your employer took out more than you owe, you'll get a refund. If they took out less, you'll need to pay the remaining amount. It's super important to remember the deadline for filing your personal income tax. You need to submit your tax return for the previous year's income by March 31st of the current year. For example, for all the money you earned in 2024, you'd need to file your tax forms by March 31st, 2025. This deadline is for filing paper forms at a government office. If you choose to file online through the tax department's website, they usually give you more time. The online filing deadline is usually extended until around April 8th. It's always best to check the exact dates on the official website each year. There are two main choices for where to file your taxes. 1. The first option is to go in person to your local area revenue office, which is also called Sanpakorn in Thai. You can find the office that serves the district where you live or work. At the office, you can get the PND 91 form, fill it out, and turn it in with your documents. There are staff at the office who can help you if you have questions or aren't sure how to fill out the form. This is a good choice if it's your first time filing or if you prefer to have someone check your documents before you turn them in. 1. The second option is to file online, which is becoming more popular. You can do this through the Thai Revenue Department's e-filing website. To use this service, you'll need to sign up for an account online. The website is available in both Thai and English, which makes it easier for foreigners. Filing online is convenient because you don't have to travel or wait in line. You can do it from your home or office. If you're expecting a tax refund, filing online usually gets your money to you faster, often directly into your bank account or by check. Let's look at a simple example of the process. 1. First, get your 50 Tawi paper from your employer in January or February. 1. Next, decide if you'll file at the office or online. 1. If you go to the office, bring your 50 Tawi, your passport, and your tax ID number. 1. Carefully fill out the PND 91 form. 1. The form will ask for your total income and the total tax already taken out. 1. Once you've filed, the officer will tell you if you owe more tax or if you'll get a refund. 1. If you need to pay, you can usually do it right there at the office. 1. Always keep a copy of your filed tax return for your records. Not following tax laws in Thailand can lead to big problems. If you don't file your tax return by the due date, there are penalties. First, there's a penalty for filing late, which can be up to 2,000 baht. This is just a fine for not filing the form on time. On top of that, you'll have to pay an extra 1.5% per month on the amount of tax you owe. This extra charge starts counting from the day after the deadline, so the longer you wait, the more you'll have to pay. Filing on time is cheaper and easier. If you purposely file a wrong or incomplete tax return, the penalties are even worse. If the tax authorities find out you reported less income than you actually earned and tried to cheat on your taxes, the fines can be very high. The penalty can be up to twice the amount of tax you tried to avoid paying. In very serious cases of tax evasion, there can even be legal action, which could include jail time. These strict rules are in place to make sure everyone pays their fair share and to stop people from trying to break the law. This can also affect your work permit and visa status. It's very important for all Myanmar workers to follow these rules. Paying your taxes correctly and on time shows that you are a responsible member of society in Thailand. This helps you avoid problems with the government and the law, which can put your job and your ability to stay in the country at risk. Your employer and the Thai authorities will see you as trustworthy. Keeping a good record is important for your future, especially if you plan to keep working and living in Thailand for a long time. This gives you peace of mind. In short, understanding and paying individual income tax is a key part of working in Thailand. Make sure you know if you are a tax resident, keep all your documents safe, like your 50 TAW, and file your PND 91 form before the March 31st deadline. If you're not sure about anything, don't be afraid to ask for help directly from your employer's HR department or the tax office. Following the rules is not just a legal duty but also the best way to protect yourself and have a successful, problem-free experience working in Thailand.